Hi, everybody. This is AJ Brown, and I've got a presentation for you. But before we get started, I actually want to give you guys a little freebie here. I want to give you something, and it's just off the spur here, and it's going to be something. Um, I'm going to give you a website here. So let me open up a browser window. I'm hoping you guys pay attention. This is just for you crew that are either here live or watching this on David's replay. But open up this Chrome browser here. Got it. And I'm going to give you a website. The website is links, links .ttfor. So Trading Trainer, that's the name of my company. tt4.me. I don't know if you can see that on your screen, but it's links.ttfor.me. And when you go here, you're going to see some of my quick links, right? And right at the top is this one that says Free Indicator Suite. If you click on that guy, it'll ask you to get, register for free access to my website where you'll get some free indicators. I think the indicators are for some Thinkorswim or some different trading platforms like that. You'll get a whole bunch of white papers and short courses that I've done, all free. But what I really want you to get, and what I'm going to do for all the folks that join, and we'll see, the internet's an amazing thing. We'll see that you join from, hearing about me from this. We're going to give you access to this new tool that we have just created. In fact, I'm going to demo it for you really quick. Um, this is a tool for options, right? And that's really been my specialty since I started doing this in 1997. I'm going to log into our Trading Trainer portal here. And this is what you'll get access to. I'm going to log in as myself here. This is what you'll get access to when you go to the links.tt for me. Um, and I'm going to, and this will happen over the next 24 hours from when you register because we have to manually, but we just created a tool called the options lookup tool. Now, there are some of these built in to some of the various trading platforms out there, but nobody has it out there with such an easy user interface. And we have found, especially if you're using Thinkorswim, we have found that since Thinkorswim changed, hands and went from TD Ameritrade to Schwab, that their data feed has gotten a little bit corrupted. And so we wanted something for ourselves, but I want to give it to you. This is something that is currently a beta test. So I want you all to go ahead and get in there. And one of the beautiful parts of this tool is the ability to go back in time and do back testing and look at the different types of options that have been available on every security that's out there. So you can see every end of day, it's already been updated for today's trading session. You can type in any ticker you want, and you'll actually notice once you register for this free tool that our user interface is getting updated about weekly. We're perfecting it and we're including more features to it. Right now, one of our favorite features that you won't find anywhere on the web for free or for cost is this price components option. Like, let's look at the data from today on Apple. Say you want to find the perfect option substitute, right? Now you can use Greeks, and a lot of people have, use Greeks, and they say, if delta is over zero point 0.9, but it turns out that the price components is a little bit better way and I'm just going to show you how to use this. So say, for instance, you want to find an option substitute, something that is less expensive than the stock, but acts just like the stock. If the stock goes up $1, so will the option substitute. So what you probably want to do is go out in time, and usually we go out 6, maybe 8, even a year in time. It depends on how long you plan to be, in this symbol. If you're like us here at Trading Trainer, we like to sell calls and sell puts against our options. And so we go out about 8 months. So say, for instance, on Apple, we might go out to even as far as like the September option. Now, you can see here we've got all of Apple's September options, and you'll notice since I clicked that button that says find the price components, you'll notice that there's these 4 additional columns: the intrinsic value, the intrinsic value percentage, the extrinsic value, and the extrinsic value percentage. Again, you don't find this especially for free out on the web. So getting access to this tool is pretty awesome, because what you're trying to do is find an option trading at parity. That's kind of the nerd speak for a option that moves exactly like the stock. So you want 100% intrinsic value and you want 0% extrinsic value. Now that would be, the perfect textbook. We have found that, if your extrinsic value is, around 5%, it still acts like it's trading at parity. So you could simply, to find a great substitute, say for instance you want to substitute buying the stock. Instead of buying the stock, you could buy this September call option. The calls are here, the puts are over here, and just go down this column and find one around the 5% number. And there you go. This $150 call going for $92.30 might be just what the doctor ordered. And what's beautiful is, you know, you get the same sort of price action, details of Apple, but instead of spending $237.56 a share, I'm going to get the same bang for my buck for only 92.30. That's the beauty of options, is the ability, or one of the beauties of options is the ability to leverage, right? So this tool is just makes everything simple for picking substitute options. And if you're back testing and you wanted to go back in time and say, hey, if I was trading this back in, November or October, and this was the option I would have chosen, you can pull up the data and it's 100% accurate, right? And what if you want to, instead of shorting a stock, right? Shorting a stock, first of all, it requires a margin account, right? You can't just short a stock, and um, you need to have that special agreement with your broker. And we do a lot of stuff in our retirement accounts, our IRAs, our Roth IRAs, and those are definitely considered cash accounts and not margin accounts. So you're not going to be able to short anything in a retirement account if you want to take advantage of benefits, but you can buy a put option, right? And put options are, you can do the same thing that we did with the call option with a put option. So for instance, again, I'll just go down this column and I'll look for the one trading at about 5%. This one's at 6.5. This one's at 4. Maybe I'll use this one at 4. This is going to be, if I buy this $280 put, and it's currently going for $44.20. If I buy this put that doesn't expire until September, every time the stock goes down $1, this put is going to go up roughly a dollar, right? For sure it's going to go up 96 cents because that's the intrinsic value component. And then because of the way that the extrinsic value curve goes on that far out in time, it's pretty much going to be a dollar for dollar move. So, like I said, if you are seeing a potential that Apple or whatever stock, we're using Apple as an example here, is going to go down, you can go ahead and buy this at a discounted price instead of shorting the stock at 200 and something dollars per share. We buy these put options and they're going to move the same way as the stock, but only in the opposite direction. This will appreciate in value if the stock goes down. So this tool has just been fantastic in our program and in the options trading world. This tool has been received. We've only launched it about 4 weeks ago. This tool has been received quite well. And so I want to give it as a gift, especially since, I kind of left you guys hanging for about 10 minutes there. I want you guys to have access to the options lookup tool. And of course, once you have free access to our web portal, you can send us messages through the support tab. Tell us what you like, tell us what you don't like. Pay attention every week, like I mentioned. We're adding functionality to this tool. You can tune into some of our free trainings. You'll notice as well on the quick links that there's a YouTube channel. If you want to subscribe to our YouTube channel, every Friday we have the AJ Brown Show, and we talk about different strategies, like for instance, earnings plays. This options lookup tool has been invaluable for finding the best earnings plays this past. We're right in the middle of our January earnings season, and if you want to use options to do earnings plays, profit on the volatility rush and crush, you know, this is a tool that, again, you're not going to find out there with this simple of a user interface with these extra bells and whistles to make the job easy of option selection. You're not going to find that anywhere. So do me a favor, go to links.tt4.me and definitely sign up for the free access. We'll go in there this evening and make sure that all of you that um, sign up get access. You'll log in tomorrow to the portal and you'll get access to that options lookup tool and you can start going to town with it the way that we are. And again, we're opening it up all sorts of feedback, but this is the Tech Wizards synergy trading event, and this is, for us, cutting edge cutting edge option stuff. Plus, get all the indicators and all of our free classes. You should take advantage of it, right? I have a little presentation. I don't know how much I'm going to get through it, but I want to cover some of it because it goes through some of the premium selling strategies that we do. I'm going to actually fast forward a little bit through some of my slides because I just want to get right into it, right? Um, let's start off with kind of my favorite piece here, which is let's do a premium trade. Let's just get right into it. Like for instance, I was recording some of the end of day prices from today. I love Ford stock, by the way. Ford stock is one that has been paying me, you know, what I call instant dividends. They're not dividends to the strict sense of the word, but every month when an option expires worthless, I'm making at least 6%, if not more, on my investment. My portfolio, my goal is to always double my portfolio every year. So my focus every month is to make 6% on all of my trades or more. And oftentimes I make more, right? So I wanted to, peel out Ford. So Ford, which is one that is constantly on my watch list, today it was trading at $10.16 when the market closed. And the Ford February option, if you're new to options, the monthly options expire on the third Friday of every month. So if I was to sell the Ford February $10 call, I'd walk away with 58 cents. So that acts very much like kind of a discount to the symbol. And let me just verify that really quick. I've got the market up, but I want to make sure I'm giving you the right number. So let me just pull this up really quick. If I put in Ford and I look at, let's see if I can scroll over here a little bit and come to our February 21st options. Maybe, maybe not. Actually, you know what we can do? We can use our options lookup tool. I don't even know why I'm using this when I can use this. Let's go with this. There we go. Let's just look up Ford and make sure. So Ford, let's look at today's closing prices. Just make this a active little lookup here. There we go. Trading tools, options lookup. Ford. Perfect. We're looking at February 21st options. And yes, the $10 call is going for 58 cents as of the market close. So my example is accurate. Let's go ahead and continue. So if I sell that back right away, right, I'm going to get a 58-cent discount. It's going to be as if I bought Ford stock for a much lower price than I did because I get kind of this rebate. And this rebate has an expiration date on February 21st. So, about 22 days from now. And at that point, it expires. It's like a coupon that can no longer be used, but I'm like the manufacturer who gave that coupon. It also acts like a dividend, right? I just made 58 cents on Ford stock. Options are sold in lots of 100. Their option 100 option shares is a contract. So if I do this transaction, if I locked in this transaction today, I basically make $58 for every one of those contracts I sold. So let's go through the scenarios of what would happen on February 21st. So if Ford closes above $10, well, then I'm going to be exercised out, right? Which makes you think, okay, if I get exercised, I'm going to get $10. That's a 16-cent loss. But don't forget, I collected 58 cents. So overall, I walk away with a 42-cent profit. That's 4.4 ROI. That's great, right? But I like the symbols, and one of the reasons why I like Ford is because it likes to go sideways. What if Ford is flat, right? Slightly below $10 per share on February 21st. In that case, I keep the 58 cents, I keep the Ford stock, and I get to do it again and again and again, right? This is actually the ideal case. We actually have screeners as part of our premium selling program that look for these stocks that are stuck going sideways. Definitely put Ford on your watch list if you're doing this on your own without our screeners, right? There's also what if Ford drops by February 21? So in that case, there's another benefit of selling option premium, right? Number one, if I make that 58 cents, that creates kind of a profit buffer for me. In other words, this symbol would have to drop down below $9.58 before it's even considered in the red, right? I'm going to show you in a couple of moments, maybe more like 5 to 10 minutes. I'm going to show you how we can reduce the risk on return even further. But just know built into these strategies of selling premium, we have a profit buffer. So let me just do a little review here. We're selling option premium. What does selling that option premium create? And notice I ask you to answer all that apply. Does it create an instant dividend? Does it create a discount on a security? Does it create a profit buffer? Does it act like an expiring coupon? Which is it? Or which ones? I'll give you a second to think on that. Now, if you answered all of them, you're spot on. That's exactly it. It's all of these, and I kind of mentioned them, but I just want to see if you were paying attention. Now, here's another question, but I'm going to see what you already know here. Number one, how can we lower how much we have to invest in these premium selling trades, but at the same time increase our returns and even convert a margin trade into a cash trade? Now, you might, if you kind of were tuning into the options lookup tool that I gave you guys free access to, or a way to get free access to earlier, you may have kind of an idea. But here are the possible answers. Number one, you could sell farther out in time options instead of, an option that expires within the next month. You could sell maybe the option that expires in 2 or 3 months. That's number A. Number B is you could replace the security with options trading at parity. C is, hey, what you're talking about is impossible. Let's just go buy mutual funds. Or D is what you're talking about is just not possible. So which do you think it is? A, B, C, or D? We'll see how many people were tuned into the discussion on the options lookup tool, because the answer is instead of buying the stock, we could replace that with an option trading at parity, use a little bit of leverage. Let's run through, well, let's make sure I talked about it earlier, but let me actually run through a slide just to make sure it's clear. So option premium, this is the stuff we sell in order to make our once a month, or if you're doing weekly options, it could be as often as once a week. This is where we're like making that instant dividend, right? Option premium is the most when we sell options that are considered at the money. But when we go deep enough in the money, we actually wind up with an option with very little premium, and it's almost completely what we call intrinsic value or in the money value. Or another synonym for that is real value. And I'll give you a fourth synonym to intrinsic value. Another definition of intrinsic value is the value of the option at expiration. It's the actual hard value of the option. So when we want to create or find a option substitute, we want to find one that has real value to it, almost 100%. So these deep in the money options behave exactly like the underlying security, moving dollar for dollar, only at a cheaper price. And I sort of talked about, when you use these option substitutes, how far out in time you should go. And it depends on, what you're substituting it. See, our premium trades, we usually, like I said, we like to sell multiple months of premium. We'll time it so that we sell, for instance, the February option, and then the February option expires worthless. Then there's the March, and then the April. In fact, statistically, when you look at my premium selling programs trades since we incepted the program in 2008, that bell curve is around 5 months. We're able to do this about 5 times on average. Now, sometimes the symbol goes 2 or 3 months. Sometimes it goes 7 or 8 months, right? Before, either getting exercised or getting cashed out. So we want to buy our back month option substitute far enough out in time so that we can collect as many premiums as possible. So for us, we like to go about 8 months out. Now, a lot of times, the best ones to use are the leaps. Leap options are the ones that expire every year in January. So, Ford has a lot of liquidity in the option chain. So, going with the September options, no big deal. But sometimes you go to an option and the option you'll find that works best would be like, for instance, the January 2026 option, if that makes sense. Yeah. So let's run through that same Ford example, but instead of buying Ford stock this evening, let's buy the Ford September $6 call. I mean, it's less than half the price. It's $4.35. And this option has about 95.6% in the money value and 4.4% extrinsic value. So if Ford goes from $10.16 up to $11.16, the call option is going to go from 435 up to 535. Yeah? It's going to move dollar for dollar. So instead of investing the $10 and change, we're only going to invest $4.35. We're still going to make the 58 cents when we sell this near term at the money option back, get that instant dividend, create that expiring coupon, reduce our break even price, all of those beautiful things. And then if Ford closes above $10, well, when you use a substitute option instead of using the stock, if you get exercised, this is why it's called a diagonal spread. If you get exercised, you make the difference between the two strike prices. So the difference between $10 and $6, you walk away with $4. Now you might be saying, oh gosh, AJ, you're setting me up if I get exercised for a 35-cent loss. But don't forget, we collected 58 cents up front. So in reality, we were walking away with 23 cents per share profit, which on an initial investment of only $4.35, that's 6.1% ROI for only holding this position for less than 22 days. And I'd love to see this is as passive as you can get. I'd love to see, any place where you can just put your money for 22 days and get 6.1% without having to actively trade it, right? We just do this one transaction and then voila, right? What if it's flat? What if it's the more ideal case? Well, great. $4.35, 58 cents for selling back the option. We get to go ahead and keep that 58 cents as well as keeping that back month option. We've made 15.4% ROI so far, and we get to do it again and again and again. Like I said, on average, we're doing this 5 times before the position gets cashed out. Of course, what happens if Ford drops? Well, in just about 2 minutes, I'm going to show you how we can reduce the risk on return even further. But the beautiful situation here is we have a built-in profit buffer. That back month option would need to drop all the way down to $3.77 before we have to, delve into the red, right? It's going to be in the black all the way down to that price. We have a 58-cent profit buffer. All right. I want to remind you that if you earn 6% on your money every month, your investment will more than double every year. Now, I'm actually going to bring up today was every Thursday in my program, my premium selling program. Every Thursday we have a workshop, and this today it was in the afternoon during the trading session. And I'm actually going to bring up our worksheet from today because I would love to show you a position that we looked at. This was a position on a stock. I can actually also show you I'm going to show you some of the stuff that we're working on real time here. We give all of our program participants a premium selling worksheet. And this is really cool. You put in your support and your resistance and where you want to bail out. You fill out a couple of different, and it will actually create a trade plan for you. So here's our trade plan on ticker OVV, right? It tells you step one, step two. It breaks it down quite nicely. And we actually took that trade plan and we were looking at doing the trade here. So on November 27th, right? In fact, I can let me just show you what this symbol looks like if I can. Maybe. I think my trading software is doing its thing really quick. So let's see if I can. I might not be able to get it going with you, but we'll see. That's okay. I'll just go over it this way. Uh, am I even? It looks like yeah, I'm good. Am I good? Yeah, I'm good. I can, I believe I'm sharing my screen correctly. Um, there it is. So if we bought this stock, we would pay $45.42 a share. So we want to do it in lots of 100. So it looked like our program participant did this back on November 27th, right? So they bought the stock and then they waited for a little bit of price action. In fact, they almost waited a month. I'm sorry. I apologize. They didn't buy the stock. They shorted the stock. So they're doing this from the top end. You can, this works just the same way whether you're selling puts or selling calls. So they went ahead and shorted 100 shares of stock, but then they sold the premium. Check this out. They sold the premium for 80 cents. And then they did something that is how we reduce our risk on reward. They bought a protective option. They bought a protective option for 84 cents, and they do that on the same exact day. So when they get the signal to sell their premium, they then immediately buy a protective option. The premium is the option that we've been talking about. It usually expires within a month. We call it near-term option. The protective option is the opposite option that is going to expire in 3 to 6 months. We use it as a form of active insurance. It actually will, once you put this, we call these two trades together a collar. Once you put that adjustment trade on, your position is then risk-free. No matter what happens to the underlying symbol, you don't have to stay up at night and wonder, am I going to be bankrupt in the morning or am I going to be a millionaire in the morning? Everything is defined for you as soon as you put your collar on. So let's fast forward here a little bit. Like I said, they sold premium for 80 cents. They bought the protection for 84 cents. Just a couple weeks ago on January 17th, this premium they sold expired worthless. So that means they sold the 80 cents up front. It expired worthless. They kept the shorted position and they're going to do it again and again and again. And then just a few days ago, they got the signal that they no longer needed the protection. So the protection that provided protection all the way from December 26th until January 24th, they now were not only were able to benefit from the almost month that the protection was in place, but now they're able to sell it back not only for break even, but for a profit. So this is kind of the cool thing about how we time our trades here at Trading Trainer when we're in our premium selling mode. Not only do we sell premium, but we protect our position. And not only do we protect our position, but we then time it so that when we sell back the protection, when it's no longer needed, we create another profit center. So, in addition to making the 80 cents, we also were able to cash in on rolling out our insurance, our protective option. Let's see, 16 cents, a dollar 16, a dollar 26. So 80 cents and a dollar 26. So you can see our break even price. Again, this is a shorted position, went from 45.42 all the way up to 47.45. This is now considered a risk-free trade, right? Let's see. How can we drastically reduce our risk on return? Well, here are the options I give you. Sell half as much option premium, sell farther out in time options. What if we collar the investment by marrying a protective option, or is what I'm talking about not even possible? So we're talking about let's collar the investment by marrying a protective option. Now, I'm going to bring you back to that example of our program participant. I want you to notice one other thing. The protective option has a strike price of $47, right? And notice after this one cycle of time that our break even price is now 47.45, 45 cents above where our protective option kicks in. I mean, take a look at this drawing here. This is one of our premium selling positions. Now, a couple things you'll notice here. Number one, there is this line right here, which represents 0%. And you'll notice we've got a range low and range high. And on the range low, it crosses that zero line between the 1 month and the 2 month period, right? Or actually between when the trade started and when the month was over. Well, let me just, without further ado, let me just add some annotations here. So the average time our trade lasts is 5 months. And so this is what's really cool about the way that we sell options. It doesn't matter whether the underlying symbol goes our way or goes against our initial trade, right? What more important is how much time we stay in the trade. Because as you can see here, and as you can see from the example of my program participant this afternoon, we we stayed in the trade for about 1 month, right? From when we opened it up in November to December. And at that point, the trade now becomes risk-free. The underlying symbol could totally go against us. But if it, goes against us, ultimately we walk away with, after 5 months, 50% ROI. If it goes for us, we walk away with 65%. Both of those numbers, whether the underlying symbol goes against us or goes for us, are absolutely fantastic outcomes, right? A lot of people say, well, what's your win-loss ratio? Thinking about traditional trading. And what we're doing here is trading time passing by, right? Options profit very nicely on time passing by if you use them correctly. So it's not about win-loss for us. It's about, can we keep the trade, going for the first cycle of trading? And if you do, then the rest of it is just frosting on the cake. You create these portfolio of risk-free trades early on, as long as you can get 15 to 20 days to pass, right? Pretty awesome, right? Here's that break-even price where I just drew that vertical line right about here. So just to drive it home, what do we have when our cost basis, our break-even price is less than our protective bailout price? A risk-free investment. So most of our investments that we have, and we try to invest our whole portfolio in these premium selling positions, very soon on, a few days after we make the initial trade, our positions are risk-free, and then it's just frosting on the cake as the position matures and ages. So let me review for you the 3 steps. Number one, if you're going to do one of these premium selling trades, you have to have some sort of initial covering position. So we're either going to buy, or if you're coming from the top, you're going to short an underlying security. Or the other alternative, which is actually nice, is to use a little bit of leverage. You're going to buy a substitute option trading at parity. That's where that options lookup tool is going to be absolutely invaluable for you. Next, you're going to sell a near term at the money option for its premium value. You're going to create that instant dividend and that profit buffer. And finally, you're going to collar the whole thing with a married option that is 3 to 6 months out in expiration to protect your investment. It's those 3 steps. What we like to do and what our screener does, and if you're looking for symbols, you'll look for this pattern. We like sideways choppy symbols, right? We have a whole criteria in our program that we look for, and we have screeners that look for them. But basically, you're looking for a boring stock, right? A stock that stays in a sideways channel. It's probably a company that gives dividends to its investors, right? We're talking about the Fords. We're talking about Pfizer's. We're talking stocks that most of the time are not in the news, right? And then you're going to trade the tops and the bottoms. So, for instance, if we're doing that call selling, covered call selling strategy, at the bottom of the channel is when you buy the underlying or call option trading at parity. You put in a stop loss order. Then at the top is when you sell the near term call option and you buy a protective put option. The call option expires worthless, and the protective put option, you sell it back once it's no longer necessary. And then you rinse and repeat, rinse and repeat. And, some people say this is complicated, but I find, the traders that trade, stocks more than once a month are complicated. You'll notice if you look at this timeline, I'm setting up the initial position, and then about once a month, I go in there and I do an adjustment trade, and that's it. Now, if you're coming from the top, like the example of the person in my program this afternoon, you would either short the stock or you could buy a put option trading at parity. Put your stop loss to the top side, sell your near term put option premium, buy a protective call option that's 3 to 6 months out in expiration. The near term put option expires worthless. And when you don't need that protective call anymore, you sell it out. So it just depends on whether you happen to be at the top of the channel or the bottom of the channel, which strategy you wind up using. So in my last few minutes, I'd like to know, how would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, and have support whenever you need it? Because that's really what it's all about. It's about saving time, creating clarity, and getting a lot of results. Would it be okay if I take a couple of minutes to tell you a little bit about my materials, my training, and my tools to see if they might be a right fit for you? First, I want you to get your free indicator suite and your options lookup tool. That's where I want you to begin. Go to that links.tt4.me website. This is an alternative, but the links website is way easier. Just use that one. The people that we're targeting for selling premium is people who don't want to have to go all over the web looking for different resources. They want everything they need in one place. Don't want to miss any opportunities, want to spend more time doing other things than just focusing on trading. They don't want to do this alone and they want step-by-step instruction. In other words, to sum it up, we're definitely looking for people in our program who want to get consistent and reliable results. So, in our program, you're going to get video tutorials on how to do the whole process. We have monthly lecture series that, by the way, are archived, that we do deep dives on the premium selling process, whether it's a tactic, a methodology, the overall premise, right? You're going to get 3 different screeners to find these underlying stocks that are perfect for selling these at. You're going to get all those planning tools, those spreadsheets, and all those tools that we use to make trade planning easy. Every week, I mentioned to you on Thursdays, we take a live workshop, and these are interactive. If you miss it, that's okay. There's a replay, but we take any candidates that our program participants want to throw our way. We analyze them very quickly in front of everybody. And then we pick one of those to plan out and then provide the plan to everybody so that you learn while you earn, right? You can take that plan and go with it, right? You can trade it the next weeks and as the different signals come. These are invaluable. We also have something called a trade review where if you decide to plan out your own premium selling trade, we have a way for you to submit it to us. And that way we look over your shoulder to make sure that you're not missing anything, or we give you a full workup of your trade plans. Now the question is what is this all worth to you? Because we also have a double your money back guarantee. Now I'm going to ask you to work with us for 6 months, right? And at the end of 6 months, if you haven't turned a profit on your trades, not only am I going to give you the money back that you invested in me, I'm going to give you double your money back. That's how confident it is that I think I can work with you. Now, do I think it's going to take you 6 months to learn how to premium? No. Usually takes people a couple weeks, depending on where you're starting from. I want to be there. Number one, I want you to come to the workshops or watch them on replay if you have to miss them on Thursdays, because I want you to have and learn, like I said, learn while you earn. I want you to be able to take my symbols and run with them, right? Take my trade plans and run with them. But I also want to be there to look over your shoulder. I want this to be an iterative process. I want us to actually be there for you for 6 whole months looking over your shoulder. I also want to give you a strategy session with one of my coaches. We of course have hand holding for those folks who don't want to, go through the videos or do it on their own. We have coaching, and I want to give you a free session with our coach because they know, if you tell them where you're starting from and where you want to get to at the end of the 6 months, they're going to help you navigate the fastest way, right? So if you add the double your money back guarantee and the bonus strategy session along with the 6 month program, what's it all worth to you? Think about that. Because if you go on my website, you'll see that a 6 month program is $597. It's flat fee, no other charges. I'm not going to renew at the end of 6 months or anything like that. You're not locked in. It's just a 6 month flat fee. Today, as part of David's program, I'm going to drop that $497. So this is how you can get that deal. Should you want to just jump in, right? Get in with this. You're going to go to optioninvesting.org/synergy. If you've got your mobile, you can just scan that QR code. And there's going to be a promo code. You're going to see, an order form for $597. Put that promo code in and press enter. It's 100, capital D, capital I, capital S, capital C, as in discount. 100, capital D, capital I, capital S, capital C. And that'll drop the price to $4.97. If you're having any problems, if you're doing that, feel free to give us a call. And I think I'm at the end of my hour. So I can take any questions, or I see Steven, who's an awesome dude, is already on the line. So I'll leave it up to David. What do you think?